Stock market is signaling bullish trend.
The stock market continues to generate positive signals despite growing concerns of an impending recession. Investors are facing conflicting signals this year as recent economic data indicates an upcoming recession, but the stock market is still showing positive indicators.
Potential investors should pay more attention to the stock market, as it typically leads the economy. The economic weakness seen in recent manufacturing data was already predicted by the 20% sell-off in the stock market last year, and the impressive recovery since then is a positive sign for the economy's rebound in the coming months.
The economy can avoid a recession this year due to the addition of nearly 6 million jobs over the past 15 months and other positive signals, such as bullish moving average crossovers and seasonality patterns. We would like to present 6 optimistic technical indicators, backed by data since 1950, that imply a potential continuation of the stock market's strength throughout the year 2023.
Strong start in January could lead to a strong year.
Historical data analysis suggests that a strong performance in the stock market during the month of January could indicate a positive performance for the rest of the year. According to observations, when the S&P 500 records a positive return in January, the market tends to be higher for the rest of the year 86% of the time.
January's strong rebound after a down year.
Historical data analysis suggests that a significant increase in the stock market during the month of January, following a negative year, may indicate a potentially strong performance for the rest of the year.
According to observations, when the S&P 500 records a gain of more than 5% in January after a negative year, the market has never ended the full year in the negative zone, and the average gains for the rest of the year have been around 30%, staying above the December low.
If the S&P 500 index remains above its lowest point in December during the first quarter of the year, it could suggest a potentially strong performance for the rest of the year.
In such cases, the market has been higher for the rest of the year 92% of the time and has had an average gain of 11%. Back-to-back gains.
Based on historical data, if the S&P 500 index records consecutive quarterly gains of at least 5%, it suggests that there is an 87% probability that the stock market will continue to perform positively in the following year, with an average gain of 13.5%.
The significance of the first 5 days.
According to historical data, if the S&P 500 index records a positive return of more than 1% during the first 5 trading days of the year, there is an 87% probability that stocks will end the year on a positive note, with an average gain of 15%.
Quarterly gains exceeding 7%.
Based on historical data, if the S&P 500 index records a gain of over 7% in the first quarter of the year, there has never been a negative full-year return. In such cases, the average gain for the full year is 23%.
This is a brand new channel. If you find any values from this video, please subscribe and like.
Your support will help us to stay motivated and keep this channel running. We are committed to providing you the best possible service.